Hi, this is Optimus Futures, and we're back with our weekly roundup of key futures markets for our viewers. For this week, we'll be analyzing the markets as they closed on the 23rd of November 2018, and as usual, we will be starting off with the S&P 500 E-mini futures market. Now, this market was majorly bearish last week, and if you recall the analysis for this market from the week prior, we've been talking about a very important support and resistance level over here, found pretty much at 2,700 round numbers. You can see this level in the past has been acting as a major area of either support or resistance for the market, and not very long ago we actually had the market sort of finding support at the 2,700 level. That really wasn't very long-lived at all, as we saw a fresh move from the sellers here to try and test the 2,700 level, which did give way to the strong momentum from the sellers over here. And since then, it's just been a week that's been dominated by the sellers pretty much all the way through. Interestingly, though, all of this momentum towards the downside has actually brought price very close to another extremely important level over here, and that would be the 2,600 level, which runs right around here. As you can see, this is also an area of very prime importance for this market, and has been acting as a very formidable area of support for this market pretty much throughout this year. In fact, not very long ago, we had a very precise bounce off of the 2,600 level, and as you can see, this entire momentum towards the downside over here is pushing price once again very close to the 2,600 level. So this makes the ongoing week a very important one and an interesting one for this market, because if we see this momentum here from the sellers continue and we see the market pretty much test the 2,600 level, it should be extremely interesting to see if we'll see another push from the buyers over here as they try to take price further up off of this area of support, like in the past, or we'll see the sellers actually able to break this level towards the downside, which will have very important implications and could potentially mean that we could be pretty much in a bear run for this market for the rest of the year, and maybe even going into next year, that is 2019. So we are definitely looking at a very decisive period of trading here for this market, and it should really be interesting to see what the market does, if at all it decides to test the 2,600 level over here. Okay, so the next market we're going to be looking at here is the light crude oil futures market, which was again a very interesting market to follow last week. Of course, it was another week that belonged to the sellers, and the prices continued to push further down south over here. If you recall analysis for this market from the week prior, we'd been talking about the importance of the $1.55 level that runs right around here, and we had identified this as an area of decent form of resistance that we had cautioned could potentially flip into support, especially given how the market was accelerating down into the level. Interestingly, we did see the market hold up here, but it was only a momentary push from the buyers over here before the sellers were able to regain control, and then pretty much the whole week belonged to the sellers, where the market just continued to push lower and further down underneath the $1.55 level. Well, so much so that the market actually, where it closed on Friday, was within touching distance of the all-important $1.50 round number. Of course, this is the price level that is often quoted by economists and investors and analysts when they're quoting price action for the crude oil market and trying to determine the long-term price direction for this market. And so, of course, it makes the $1.50 a very important level that analysts and investors, whether they're looking at the fundamental side of the picture or they're looking at the technical side of the picture, will always be careful and cautious about it. And you can see that if you stretch this level to the back over here, in the past, of course, we've had tons and tons of periods where price either found formidable support or resistance off of the $1.50 level. And so once again, price is accelerating into the level, and so we would once again caution that a bounce off the $1.50 level over here will not be a total surprise for us at all. On the other hand, just looking at the momentum that we have from the sellers over here, just a temporary hold up over here, or maybe even no hold up at all, where the market just continues to move through the $1.50 level, can actually also not be totally ruled out either, just looking at the way that the sellers are taking control of this market over here. Okay, so the next market we're going to be looking at here is the Euro currency futures market. This is, of course, a market where we're trying to determine if it's past a period of notorious sideways trading and a phase of consolidation. We haven't yet been able to determine confidently whether it's past that period of consolidation, if at all. But we're looking at some evidence here that does suggest to us that the market may potentially could be developing or building up momentum to break past that period of consolidation. What's most noticeable for us is the fact that we're now seeing continuous lower highs as well as lower lows. As you can see, we had a low over here, then we had a low over here, and then we had a low over here. What is interesting to note here is that the market actually closed at an area of former support right around here. You can see that there were at least 2 occasions here where the market did find support of this price level, and that's pretty much where the market closed on Friday. Now, if this level here holds as support or continues to hold as support, and another bounce over here where the market actually ticks higher than this previous high over here, then this entire momentum that we see building towards the downside could actually just overturn, and the market will definitely go back closer towards the 1.16 level that was previously acting as a pivot for this entire period of consolidation, and so would prove that the market just continues to come back to the 1.16 level and just continues to consolidate either slightly above or slightly below that level. On the other hand, if this level over here ceases to hold as support and allows for the sellers to take price down, especially early going into this week, and we see the market actually tick lower than this former low over here, then we have the same momentum intact, where we're seeing the development of a downtrend over here. And so, I mean, even though the market really hasn't broken out of this period of consolidation in a typical textbook breakout fashion, where the market just creates a lot of strong momentum in the direction of the breakout, we're actually seeing the market gradually move away from the 1.16 level and this entire area of consolidation in this area over here, which is also satisfactory, and which does show us that the market here may potentially be looking to downtrend, and price may be looking to move further lower and down south over here if the market actually continues to make lower lows as well as lower highs. As we said, though, a lot will depend on the market's ability to either find or not find support at this horizontal area of former support, and that is something that will be on the watch list for us going into this week as we follow this market. Okay, so next market we're going to be looking at here is the gold futures market, which in the way that we're looking at price action over here is actually pretty similar in market rhythm to the Euro currency futures market, where we're looking at a majorly consolidating market, but we're also looking at some of the fundamentals being laid for a trending market. So what we mean by that is, of course, that we're noticing higher lows over here as well as higher highs, which suggests that the market is potentially trying to develop into an uptrend over here. But we're also looking at the fact that the market overall is just struggling for momentum, and we're not looking at a textbook style uptrend over here, which would have to be a lot more steeper than what we're seeing right now over here. Last week, when we were analyzing this market, we were talking about the rebound off the $1,200 level, which also fell in confluence with the rising support trend line, and we discussed how the market rebounding off the $1,200 level and this rising support trend line didn't really come off as a surprise for us. Interestingly, though, what did come off as a surprise last week was how the market was able to penetrate easily past the 1210 area of support and resistance. As you can see, it's not a major area, but over the recent past, we've seen the market initially find support at the level, and then later we found that the market was finding a lot of resistance off this level. And then later on, we had another occasion where the market found support at this level. So definitely a proven area of support and resistance, although not a major one. But just looking at how the market was able to penetrate through this level does tell us a lot about the bullish momentum here that seems to be developing. And that's probably what is keeping this market intact into an uptrend, even though it's not a very strong one at this stage. So what we're looking at over here going into this week is whether the market will be able to continue to find support at the 1210ish area. If that seems to be the case, we could actually see the market trying to retest the all-important 1240 horizontal area of support and resistance, which is definitely a lot stronger in terms of how it's actually extends all the way to the back, and we've seen some really strong rebounds off this level in the past over here, and of course more recently where the market was able to find definite resistance off the level. So it should be interesting to see if the 1210 level here will continue to hold and allow for the buyers to take price further up north to the 1240 level. Of course, if this momentum towards the upside is to sustain itself, we should be able to see a break off the 1240 level where price continues to make a move further up north and basically create a new high that's higher than the previous high over here. So that's actually what we will be looking out for, but just looking at how the overall momentum here seems to be sideways for the most part, and we do look at all this action in the more recent weeks as for a market that's basically struggling for momentum. If the market really doesn't hold at the 1210 level, that also wouldn't come off as a surprise to us, where if the market just moves further down underneath the 1210ish area back towards the 1200 area, it would just prove the point that the market really is just in a period of consolidation over here, which appears to be an uptrend, but is for the most part sideways trading activity. Okay, so finally we look at the 10-year Treasury note futures market, which was unsurprisingly very bullish last week. Of course, this is a market that tends to behave in the opposite fashion to the S&P 500 E-mini futures market, as well as the U.S. equity sector at large. And since we're seeing a strong bear run on those markets, not a surprise really to see a lot of bullish activity for this market. What is really interesting here last week was how the market was actually able to move past the 119 level over here, which is a round number as well as a very, very decent area of support and resistance. Actually, this level has been a pivot for all this more recent consolidation that this market has been in, where the market has used it as a center point for the entire period of consolidation. And so it's really interesting to see that the market was actually able to close above this level. Now, if this level continues to hold as support here, and we see buyers remain dominant as they were last week, we're not seeing a lot of hurdles for buyers here up until the 120 mark. As you can see, of course, that is an area of very decent support and resistance, of course, being a round number in itself as well. So that is where our eyes will be set up as a target if the market here continues to find support at the 119 level, and we do see buyers continue to post the same kind of momentum that we witnessed last week. And so that is the level that we'll be watching for this market, provided that the market is able to hold above the 119 level going into this week.